Well, it depends. If it's, I assume we're talking prime, the best available rates. If it's an insured mortgage, we have something at 4.8 for an insured mortgage. And the next question is, will the Bank of Canada likely raise or lower the interest rate by 29-23? I assume we're talking about 2023.
Right.
They are, we're expecting by the end of the year, at least a quarter of a point reduction, and then a further 1% in the first half of next year. So, but likely a quarter point reduction this year, by the end of the year.
Okay, David, I got a question for you. Do you think on June 7th, the Bank of Canada going to raise the rate by 0.25%?
No, I do not. I think that they're in a holding pattern now, as well as the US. The feds are also going to hold because inflation is starting to come down.
Right. That's good to know. That's good to know. I have a different opinion altogether on it based upon some of other people's feedback, but that's the fun part of it. The fun part is to answer all these things, have different opinions, and having different opinions is open up the dialogues. It's a good thing to have several different opinions.
Yes, well, I'm just basing my information off what I'm hearing the Bank of Canada is saying, and RBC has some comments as well, but mainly off of what the Bank of Canada is saying.
Yeah.
My question. Yeah, go ahead.
No, just please go ahead. Sorry, forgive me.
There was a question there. If you are renewing a mortgage, go fixed or variable. Right now, most people are going short-term fixed with 2 or 3 years. That's the most common at this point in time. I think once the prime rate starts coming down, then people might be start looking at variable rate mortgages again. But we're in an unusual time right now, because probably for the last 10 years, everybody was looking at either 5 years fixed or 5-year variable. Now all of a sudden people are looking at 2 and 3 year terms.
Okay, you got another question from Blair. If you are renewing or mortgage, go fixed or variable. I guess you answered that, is it?
Yes, so that's what I was saying. Right now people are going with fixed short term, 2 or 3 years, because variable rate, it's still kind of high, but it'll probably be more attractive once the prime rate starts coming down, most likely near the end of this year.
Excellent. All right, thank you, David. Let's gonna get cracking on our meeting today. Good afternoon, good evening to everybody. So those who are from West Coast, East Coast, other times, wherever you're from, good day. Today is May 9th, and we will be talking about different topics today. And we have a lot of information. We got all the experts here tonight to share what you need to know. And we're going to proceed from there, though. All right. Those who are not members, you're requested to become members. If you want to build a relationship, exchange ideas, and looking for a collaboration opportunities. Real estate is never a solo business, by the way. If you want to be successful, you need to have a lot more connections, and people do not want to work with the strangers. So that's why we have opened up this club in 2005. Ever since then, we never missed a meeting. Regardless, though, just thought I should let you know. Moving forward with this thing, networking multiplies your network, and we know it the hard way. Every time when you start growing from one property to second, and you need multiple partners, joint venture partners, you want money capital, you want property manager experts, then you realize that, hey, listen, I need to cultivate this relationship. And this business is all about relationship, apart from investing, though. So next time, if you're a member, you want to pitch a deal, you got a sweetheart deal, you want to share with members, you are welcome to send the deal to us directly, and we'll post it for you and share with other investors. Though something people don't learn, no matter how hard you try, the word is called due diligence. This was article written in 2009 about due diligence. Where do you get information? Now we got a couple of situations as we speak. A gentleman who's a contractor himself bought himself a lemon, and he might be out by 150 to 200,000 altogether. This person not a young person. He's not new to Canada. He's brought up here. One mistake is too many. So when it comes to due diligence, please don't skip it. Please don't seek the advice from an average person. We have experts. Seek the advice from experts. Get everything in writing. Have a decent lawyer, good property inspector. Listen, you're buying $1 million house. Why save nickel and dime? Couple thousand here, couple thousand here. Get the best accountant, get the best lawyer. And we got everything for you here. These are people here willing to offer a lot of information with their experience, and that is absolutely, absolutely very helpful. About facing foreclosure power sale, listen, the floodgates have opened up. No matter what people say, there's so many defaults happening, and the TD Bank have launched a new program altogether about mortgages. The banks have been told not to pull the plug. The people are extending amortization to 30, 35, 40, God knows how many years. And David Grossman is going to enlighten us now. What are the options when people got stuck, where the payments become a little too high, and what are the options to do that? So these are some of the average Canadian real estate home prices across Canada. Why do we want to share that? Because Toronto is not Canada, Vancouver is not Canada, but there are other markets where things are a little bit more flexible. And this is strictly based upon all provinces and all the territories. And people look at it and say, listen, should I move to Calgary or should I move to Saskatchewan? Should I move to East Coast or West Coast? And where are the jobs? And so on. This is something recently in Global Mail. People who bought condos having regrets about it, they can qualify for it. The mortgage payment do not make sense. Even they're renting it out for a very large amount of money, they still have negative cash flow. It's hard to bite every month and not realizing it. And this is something, it's a hot potato. Some people are okay with it, but most of them look at the headline news from different newspaper. This is a good news and bad news. Good news is we are creating more jobs. What does that mean? It can push our inflation rate higher. What does that mean? Then the Bank of Canada have to raise the interest rate. So there are different opinions. In my opinion, June 7th, there is quite a big possibility up at 80% that Bank of Canada may increase the rate by 0.25%, because US raised the interest rate 10 times in a row, and we are sitting slightly behind them because our economy is still going way too strong. And this is where they said, hey, listen, Bank of Canada have to do something about it. And this is a mixed bag of news. Good news in one way, that our interest over our unemployment rate is less than 4.9% or less than 5%. But number of jobs we're creating, 35,000, 41,000, 150,000 jobs in January, that does not give any indication that the economy is slowing down altogether, though. So this is something about Canadian living standard as we are living in a global economy now. What happened in 81, 2021, and 2060? Every 40 years, where Canada gonna be altogether when it comes to GDP per capita, Canadian dollar, and the purchasing power. Those who have been around, because I came to Canada, I started investing in Canada in 1981, and why these figures matter though. So inflation, that's something, we all are facing with it. Oil prices are one part of it. Some conflicts with in the Middle East, conflicts in the Russia, Ukraine, conflicts with China and Canada now. All these things have impact, and they affect the bottom line, inflation, by the way. So this is a new area. Just thought you should have a head up news that in the Dawn area, the Portlands area is ready for development, 593 acres altogether. They've been working on this land altogether for a long time. It's all industrial area. And this is going to become another prime area to invest. Really, I don't recommend people for a pre-construction or so, but looking at this possible humongous development, this could be something one should not deny or around the area. Because once the infrastructure changes start coming in, it is going to have ripple effect, by the way. This is something interesting. So here is a roll page forecast for 2023. Where are we going? Where exactly our home price is going to be? Randi Goodman is going to enlighten us about the current market value and what we should be looking into it. This is something about mismatch about Canada. This has come from the Fraser Institute. They are saying what people would like to have, what they would not, what exactly is happening in the market. And this is kind of funny that people like to live on the ground, but they can't afford it. So they're gonna go vertical, not horizontal anyway. So this is something I mentioned this time, last time as well, though, that this mismatch is gonna continue regardless because of the prices of the land. And two cities are facing the major issue, which is Toronto and Vancouver. And the rest of the Canada has a ripple effect. And some of the other markets are benefiting from Toronto's market, from Vancouver's market, and people are going further, east, west, north, south, whatever it takes to be where they can afford a house. This is something very informative. I want everybody to look at it. If you would, please take your camera, get a picture of this slide. These are the lot of benefits Canadians do have them, but they never utilize them. So please look into this this link, and you may gonna benefit a great deal from it, not knowingly that, hey, there is a lot more to offer for you. This is also happening. The developers, the builders are also suffering. Some builders are offering $92,000 to buy their condo, or they're offering you, hey, come by buy our piece of property. We will pay $2,500 per month for the first 2 years for you, or $3,000 if you buy 2-bedroom condos. So what does that reflect you? The affordability. People want to buy something, the price is way too high, interest rate is slightly higher, and the affordability becomes a question. This is first time in Ottawa. The prices intend to decline. Just thought I should just let you know. The prices have settled a little bit, not humongously, from 690 to 640 or 635 to begin with, which is not a huge drop, but still a substantial drop because this market has been going strong for the last 30 years. This is the headlines, April 27th, looking for blood, condos nearing completion with mortgage appraisal less than investors paid for it. That's painful. David, what do you do in this situation when the brand new condo is appraising for a lot less what investors have paid for?
Well, in that case, you got a problem. So you either need to sell it or you need to come up with additional funds to close on it if you want to close on it. So it's a tough situation to be in. And a lot of people are getting hurt by that. But the only option is to come up with the additional cash. Or see if you can get it assigned or sold. If you can't list it, you have to try and assign it, which is not ideal. But if you cannot close on it, you have to take action.
All right. I'm also gonna get some input from Jyoti. She's the lawyer. Jyoti, what would you do in this situation where the current appraisal is a lot less than what investors have paid? And it will also make gonna have, even after renting it out, may gonna have a huge negative cash flow.
Well, if the appraisal is lower than what the original booking price was, then the buyer is not in a happy situation. He needs to either, like my friend said before, either he needs to get the extra cash or he needs to sell on an assignment sale. And because an assignment sale is something in the future, the person buying on assignment may not have too much of a problem closing the condo because he has time with him to his benefit.
Randy, what do you suggest in the situation here? Randy Goodman.
Sorry, I was looking at some market numbers. What was the question?
Okay, what do you see on the screen? A lot of new condos are getting ready.
Appraisals. Less than investors paid, yes. Yes, it's an unfortunate situation with the pre-construction condos. They're having a big problem. They're starting to come back a little bit, but they weren't changing their prices. They're putting things on hold. They're not building. Usually there's 50,000 condos being built every year. And this year, I believe there's 22,000. So that just tells you the major difference in what's going on. And the prices aren't being adjusted. They had raised their prices in the hot market and now they're not adjusting them. They don't want to adjust them. So they're holding them, and which is also causing a housing shortage for us, but also contributing to a little bit higher prices and whatnot. So the investors, if they bought in the last couple of years, paid at the higher rates, they're not worth what they are. They're not worth the same price as what they paid a couple of years ago. And they're not able to get out and get their money back. So the mortgage appraisals obviously wouldn't be as high as what they paid either, because they're appraising them at the current market value, which is not the same. So a lot of people are hurting in that regard, needing to sell and possibly selling at a loss, whether they can afford it or not, on an assignment and not being able to close. So a lot of people are hurting in that area.
We're going to take another opinion from Jerry. Jerry Hoganhood. Just your input, please.
Yeah, thanks, Nav. I mean, from a tax perspective, I guess if there's any good news, if you're, selling an investment property at a loss, we've created a deduction. And when we sell properties for gains, we always have the debate about is it a capital gain, which means it's only half taxable, or is it regular business income? And when we're on the other side of the fence, when we're selling at a loss, forget the capital gain. We take the position that it's straight income and we have a loss, which can be applied against other income. So, it's never good to sell for a loss, but on us try to put a positive spin on it, we get some tax relief, and depends how we account for it. We can actually double that tax relief if we take a different approach to it. So.
That's right. Well, again, one word, capital losses can be written off against capital gains only. Is that correct?
Yeah, that's correct. So capital losses can only be applied against capital gains. So again, if we took the position that we account for it not as a capital loss, but as a normal business loss, which a lot of real estate investors could do, then that loss can be applied against all of your other income. So there's a little bit of a blessing. I hate to see people lose money, but if we can save them some tax because of that consequence, then at least they're recouping some of their loss.
Thank you. So here is something else about population of Canada reaching over 40 million people. We expect another 500,000 people to come to Canada this year. And that's going to create something good in one way. The shortage of housing is going to push the rentals high, but we also have to deal with the fact that there could be some other situation with homelessness and some other issues at the same time. When we have a lot of growing pains, we need about 800 to 1 million people to come and replace the people like me who are baby boomers, who are 65 plus. So there's a huge vacuum right now, which should have been addressed 4 or 5 years ago because of COVID. So this is going to create a different scenario, but also every time there's a problem, there's opportunities. So be aware of it. Opportunities are humongous when there's a problem. How to build in this time, in the chaos time, all the stuff that's happening and confusion, what not to do, what to do. This is the best time to get into this business. And this is very, I've noticed that most people have done extremely well though. The demand in Toronto is going to remain extremely high, no matter which way you look at it. These are a bunch of surveys. Whichever way you look at it, this is going to be higher. Rentals are going to become another issue altogether. And eventually the provincial, municipal, federal level have to come in with some sort of rental pool or start offering a lot of incentive. They have started already in BC.
Hey,
In
Troy,
B-
hang on. Just,
In BC, they allows you that you can turn your single family home to 4 units. Ontario is almost 3 units now, but we're gonna be wait and see. And those properties, your single family home, you might be able to have another additional dwelling unit, as well as turn your basement to in-law suite, or maybe conversion to duplex and triplexes. This will be a good time to invest as well, in my opinion, though. Moving forward, learn how to do it. We're going to have a couple of interesting things happening. We have real estate auction on May 11th, Thursday. Those who are interested in attending it, send us a text. We have the master class, how to flip properties, on May 20th, this coming Saturday. Apprenticeship is ongoing, and we're going to definitely have a huge demand for power of sale. So we're going to do a free 1.5 hour seminar on May 27th. So those who are on the mailing list will get an invitation to attend all this. Here is the latest one today. And I want to gain input from everybody here. Bank warned mortgage delinquency could rise by more than 1/3 as homeowners struggle to make payment. This just came off the press on about 6:30 or so. David, I just want your feedback on this one, my friend. David Grossman. All right.
sorry about that, Navtaj. I had an urgent call come in, so I apologize. Okay, so was there a specific question, or are you ready for me to do my little talk?
No. Read what you see on the screen.
Bank
The
warns
latest-
mortgage delinquencies could rise by more than 1/3 as homeowners struggle to make payments. Right. Okay, well, I mean, I don't think that's gonna happen, because I think that what I've heard is that the banks are not acting quickly to take action, because they don't want to create a massive problem. So they're being patient. I've also heard that the delinquencies aren't that big. So I don't know. I've heard different points of view. So I'm not honestly sure what to believe, but I have also heard that they're not taking action because they don't want to create problem. There's a lot of people who would be underwater on their mortgages. I mean, don't forget, when the banks are lending money, especially to first-time buyers, they're lending up at 95%, 90 and 95%. So it does not take long before you are technically underwater on your mortgage. I mean, when you consider a small market decline, and then there's a 5% cost to sell your property, right, for real estate commissions. You've also got the cost of CMHC insurance, which is like up around 4% if your mortgage is 90 or 95% loan to value. So very quickly you could be underwater on your mortgage. So I think that there is pressure for the Bank of Canada to reduce mortgage rates so that homeowners can afford their mortgages to keep the number of defaults down. So I don't think we're going to see a bloodbath. I think that inflation is already starting to turn and that things are going to settle down.
Right.
That's
Thank you,
what I
David.
think.
Right. We're going to move forward with this thing and we're going to discuss some of those other things like this. One way they are saying that we can turn around is change the zoning, the empty houses. Zoning is the one way of creating a lot more housing in Toronto, especially. That could be one of the solution. So this is something. On the other hand, what are we looking in the future of Toronto? We are looking at some buildings which can be hitting about 100 stories. So there are altogether 7 buildings which are in the progress, by the way, and they're competing with each other. And this is something we look forward for it in one way, because this is going to turn Toronto into like a big apple, like another Manhattan. In one way, it's great to see what is exactly happening, what are the rates of how these buildings are selling, how they are dealing with the market as well. This is something you might have heard about it before. The Regional Planning Commissioner of Ontario to a conclusion that we need 1.25 million potential new homes. But they are saying under development. But again, this is something you can look into from political point of view. This is something to watch, and the builders are waiting to see if they can cut down the red tape to get the building permits ready to build. And this is a dilemma we all have been going through for many, many years. This red tape is a red tape no matter which way you look at it. Something before you invest with anybody else, please before you invest, check before you invest.ca. This is from Ontario Security Commission. Anybody who is investing with any REIT, any kind of limited partnership, please check it out. There are a lot of things which I want to forewarn you. One of the things which is coming in the picture, I'll share with you in a minute, that before you buy any piece of property, ask the developer or builder, hey, do you own the land, yes or no? And you'll be shocked what you want, you will find what you are going to discover. A lot of builders will sell the piece of property on a piece of land which they have not bought it yet. Yikes. Welcome to real life. We're going to skip this one for a minute. Help must sell 30 days. This is something from happening from for a while right now. The reason headlines goes in because there are some facts behind it, though. Just to be aware, there are some certain things one have to be careful. Okay, bloodbath, we talked about it. This one we had already spoken about it. So this is about the interest rate. What happened to interest rate? What is happening now? There are a couple of things I like to focus on tonight, especially. They are looking for some sort of mortgage relief. By the way, the banks are doing it whatever the best they can do. One of the best option, what I've seen from last several months or last almost a year since February onward, that the banks are extending the amortization to 35 years, 35 years. I heard something for 40 years, but I cannot confirm it. 30 years is pretty norm, and they're trying to work around with the homeowners. And if the mortgage is insured by CMHC, there's a more leverage to it. If it is 20% down or so, the banks is utilizing their own discretion. And they look at you, say, what else do you own? Do you have a lot of stuff on the credit card? Do you have any other loans and so on? So banks are not pulling the plug, but banks are definitely pulling the plug on those people who are defaulting the credit cards, defaulting the line of credits, defaulting HELOC or any business loans. Banks are not stepping back. We have seen an incredible amount of action taken by banks, and they're forcing people to pay for it, or they're going after all their assets. This means writ of seizure, more or less, as to speak. This is about interest rate, by the way, in case you want to know what's happening in Europe, what is happening in Bank of England, the US, Canada, and Bank of Japan. This thing, something else we can expect. What can we expect the interest rate to be? When David's talking about interest rate could hit back to about 2%, 2.5%, I do believe that there is some possibility to it. Again, we will see when we get there, because the Bank of Canada promised at one time they will not increase interest rate, but they did. So again, they can make a commitment based upon the current scenario, but they might have to adapt according to the new situation. So this is about 35 years. I discussed about that all 6 banks are looking into it, that, hey, what can we do? Can we just extend the period for 30 years? As I said earlier, this might be a band-aid solution for the time being. When people have mortgage from $3,000 to $4,500, it is difficult, no matter which way you look at it. And there's a bit of uncertainty, and again, inflation as well is not affecting. So TD Bank is running a campaign. I do believe they have 6 different ads. Some of you might have seen it. This is something else. They just want to come back with different scenarios. Hey, listen, what we can do for the mortgage. These are the different advertisements started April 10th, actually. It's going to run till July 9th, 30-second and 15-second ads. And they are talking, hey, don't get panicked. It's okay. Come back to the bank. Let's talk. And we will find a solution for you. Some of you might have seen it. So this is all, I believe, directed by the Bank of Canada, or the banks are doing their very best before they pull the plug on you. Till July 9th, you will see these ads by TD Bank. Again, this is the same thing. This is something you might have seen. Your mortgage should not feel like a wall ride. This is one of the focus on it. And one more focus at TD Bank, we focus on helping customers take control of what they feel like overwhelming experience. All these things are leading them, and also they're giving us a clue that there's a lot more going on than what we are aware of it. Just like David said earlier, we don't see much default rate. The unfortunate part of the rates, the delinquency rate we get, first of all, we get every 3 quarters. In Ontario, or when they report it, they say you have to be minimum 90 days or more. On province of Ontario or other provinces, 4 provinces where we have power of sale, you don't need to be 90 days. The lender can take quick action, and even he can expedite the whole process, and the property can be sold. Difficult time mortgages. Angus Reid said that. Let's skip this one too. We're gonna get into what we want to know. Bank of interest rate. This is something I was talking earlier to you. Bank may hike interest rate if the inflation does not get around 2%. So this is the language they gave it away last time. So this is where I feel that there might be a possibility on June 7th that interest rate may gonna go up. Maybe the final time, I hope not, but this is some indication. That's my opinion, by the way. So even US, okay, we're gonna bring David, David Grossman. David, is all yours, my friend.
Okay, all right. Thank you very much, Navtaj. So, yeah, I mean, as I said earlier, inflation is starting to come down, and I think that both the Feds and the Bank of Canada are in neutral territory right now, that they're not going to raise rates any further, and that we are likely to see, well, I'm hoping we will see 1/4 point decrease in the prime rate, or the overnight rate, of sometime this year, and maybe if another full point in the first half of next year. This is some of the reports that I've been reading. So that's as far as rates go. And you know, we have rates now on insured mortgages, you know, in the 4.5 range. We're doing some, I'm working on one right now, 4.5% for 5-year fix. As I mentioned before we actually formally started the meeting, there were some questions. And I was mentioning that most people are going with 2 and 3-year terms right now, which is unusual because for the last 10 years, it's always been 5 years terms. People were either going with 5-year fixed or 5-year variable. Variable was very popular. Right now, almost nobody is going with variable rate because the rates are still too high. But I think that will shift once we see rates starting to come down, that variable rates could become more popular again. I thought I might elaborate a little bit on this. What is an insured mortgage versus an uninsured? And there's also a new term that people started to throw around a little while ago too. If a mortgage is insurable, so you know you could get a preferred rate if the mortgage is insurable. And what that means is that the lender might insure it in the back without you even knowing about it. But if they believe that they can insure it, because they will insure mortgages in order to reduce their risk. And when that happens, they can offer lower rates. So right now, for example, I'm working on a mortgage where the banks are charging, you know, 2-year rate is well over 5%. A 5-year rate is still over 5%. But if the mortgage is insured or insurable, then we're looking at significantly lower rates, like around 4.5%. And I can even do a pre-approval now for somebody. And again, insured doesn't mean that it necessarily has to be less than 20% down, right? Because traditionally, as a consumer, if you're buying a property with less than 20% down, as far as you know, yeah, that means it has to be insured, and you have to pay an insurance premium, which is typically added to the mortgage. It's capitalized on the mortgage. But if you have more than 20% down, consumer doesn't even realize that the mortgage may be insured by the lender. But if you meet the criteria and you have very good income and credit, then you can qualify for better rates. So that's what that means. The other thing that people started doing now is they're shopping around more on renewals. There's an opportunity, and it's important to do. This is an area of the business that many years ago I had a couple of experiences where I worked really hard to get people mortgages when I was newer in the business. I've been at it for 19 years now. And then at the last minute, the lender who's currently has the mortgage would match or better the rate. And it's work to get somebody to move because you have to collect documents and your credit has to be taken all over. So it's more work for the borrower as well. But now the tide is turning, and it seems more people are looking at alternatives. So if your mortgage is coming due, make sure you shop around, because the other thing is, if your mortgage was insured, whether or not you may not even know about it, but if it is insured, that insurance will go with the mortgage to the new lender, and you can still qualify for a better rate. So it's important to shop around and talk to a mortgage broker about what your options are. You can definitely give me a call, but you will have to qualify. You're going to have to go through the process of confirming your income again and doing credit checks and all that kind of thing. But we try and make that as easy as possible for you. And yeah, so let's see. That's all I had. Were there any specific questions, or does anyone have questions?
There are 2 questions in the Q&A.
Are those for me though?
Just check them out.
Yeah, I don't think those are for me.
Okay, no, that's a Bradford bypassing Bill. That's Blair. Okay, these are about assignment clause. We will let this addressed by others. Thank you, David. Appreciate it, my friend.
No
Hang it around
problem.
there, please, David. Okay, next thing,
Sure.
we're gonna talk about the taxes. Oh, yike. Did everybody file the tax returns in time, even though CRA went on strike and so on? A couple of things you need to be knowing about this thing. How much taxes are you paying in average Canadian? This is something I always want to remind you. When you're working for somebody or working for yourself, there's a huge difference in taxes. Just be aware of it before you start anything. Moving forward, this one, oh boy. This is the question today. Before we bring our next guest speaker, let me introduce your guest speaker first, then I'm going to ask that question first. So our next speaker is Jerry Hogenhout. He is one of the rare Canadians, one and only Canadian, I shall say, who have different licenses in 5 separate regulated investment marketplaces, by the way. He's a wealth of knowledge. He's also a fellow investor. And we're going to put him in his spot today by asking this simple question. Jerry, are you there, my friend? Jerry?
Yeah, yes, I'm here.
Okay, can you read this question and then answer it as well?
Okay, question. Do Canadian real estate investor have to pay capital gains when they have lost their property under power of sale based upon the following facts? Bought the property in 2002 for 200 grand, 20,000 down for investment purpose, refinanced it and placed a new mortgage for 650 in 2018 to use for personal, we use the cash for personal use, not for investments, any taxes due. They defaulted their mortgages and the lender sold their property under power of sale. Okay, so we'll go one question at a time. So again, they bought a property for 200,000. They put 20 grand down, so they got a mortgage for 180, and they refinanced the mortgage up to 650 and pulled the cash out. Whether it's for investments or not, there are no taxes due when this is done. Basically, if they pull the money out for personal use, they cannot deduct the interest, but again, there's no taxes due on that refinance. If they do use that money for investment purposes, then the interest that they pay on that refinance becomes tax deductible, but there's no tax on the principal that they obtain. Okay, so anytime you refinance, you mortgage your property, there's no tax implications. The question and decision is whether the interest that you pay on that mortgage is tax deductible. So now the second part, they default their mortgage and the lender sells their property under power of sale for $750,000. Do the originally subject to capital gain? The answer is yes. Now, basically what's going to happen is through the power of sale process, there's going to be a whole bunch of costs added. So in this case, let me just go back. They paid $200,000 for the property. And basically, for whatever reason, they stopped paying the mortgage, and the person or company holding the mortgage is going to go through a power of sale process, which again, there's a process involved. So many days after defaulting on the mortgage, they have to get notice. Basically 3 months after the default, they can sell it. Now, what happens is throughout that process, everybody is adding costs. The lawyers get involved. They're charging so much an hour, depending on the clauses in the mortgage document. For example, any private mortgages I do, I would put clauses in that bounce checks. There's a $2,000 fee. Property taxes are in arrears by 6 months. There's another fee. The mortgage isn't paid on maturity. There's another fee. So there's a lot of fees that add up to what has to be paid out from the proceeds of the sale. But in this example, purchased, I guess, for 200, remortgaged up to 650. That is not a taxable event. Now we go power of sale, so they sell it for 750. So basically the cost, the adjusted cost base is 200. The cost to sell would be very high because all of these clauses in the mortgage that add cost to the sale process, everybody involved is charging an arm and a leg. So there's a lot of cost involved to go through a power sale. But when the property is sold and there are net proceeds, that goes back to the owner of the property. And from a tax perspective, assuming it was a capital property and not a principal residence, they would pay tax. So in this case, there would be proceeds of disposition would be $750. The costs of disposition would be astronomical. Everything involved in the whole power of sale process. So that would be your cost to sell, and then your original cost is $200,000. So yes, the owner, even though they've stopped paying the mortgage, they would end up paying capital gains at the end of the day. And in all probability, when they sold the property under power of sale, a prudent lawyer would probably send some of that money to CRA as a prepayment of tax, because obviously these people weren't good with their money. So in the first question, are taxes due when you're bumping up the mortgage? No. Second question, is the property subject to a capital gain tax? 100%. If there's excess funds going back to the original owner, that's on a power of sale. If it's a foreclosure, that's different. Basically, whoever is foreclosing on your property is trying to take your property. It ends up in their name. So there would be no tax on that, but they're taking your property. So yeah, anyway, that's the answer to those questions now.
Okay, I got one more question for you. The question is simple. When they bought the property, there was a mortgage of $180,000.
Yeah.
And you're able to write off interest payment. Now, since you increased the payment from 180 to 650, do you think the CI are going to question you why are you deducting the interest payment on 650 when the acquisition cost of the property was 200,000?
No. So basically, again, step one is, so I guess you said it's for investment purpose. So obviously the 200,000, whatever interest is being paid on that, will be tax deductible against income. The refinance, again, as I mentioned, it depends what we're using that money for. If we're using it for personal purposes, the interest on that, on the additional amount. So let's go back a step. We originally had a $180,000 mortgage. We paid 200. We put 20 grand down. We have a $180,000 mortgage. Assuming that's a rental property for investment purpose, then we can always deduct that 180. Now we refinance it up to 650. So the difference, which if my math is right, is 470. The original 180 will always be deductible. The interest, the 470 or whatever it is. Again, we have to ask ourselves, is that money being used for investment purposes, or is it being used for personal purpose? If it's for investment purposes, we get to deduct the interest. And if it's for personal purposes, we do not deduct the interest. Now, another point worth mentioning on this topic is sometimes the interest is capitalized. And what I mean by that is, for those of you that understand the difference between a balance sheet and an income statement, when we're talking about income taxes, we're talking about the income statement, income minus expenses. When we talk about the sale of a property, we're looking more on the balance sheet side. Sometimes the interest that we would normally deduct on the income statement may not be deductible. Maybe there's no more rent coming in. Okay, let's just hypothetically say, they've stopped paying the mortgage here in this example. Let's just say there's no rent coming in. Then what we do is what we call capitalize the interest. So the interest that is being paid is not going to be a deduction against income. It's going to be added to the cost base. So the cost base was 200,000. So now if we capitalize interest payments, that just increases the cost base, which will then reduce the capital gain. I don't know if I've lost people, but that is how it works.
All right. Well, anybody who got a question, please feel free to call Jerry Hogarhout. He's gonna be here as we speak. Thank you, Jerry. Appreciate it.
Yeah,
Sorry.
you're welcome. Thank
All
you.
right, sir. We're gonna move forward to our next speaker. Rory is not gonna be here tonight either. Sorry, he is engaged in something else. We're gonna bring our real estate lawyer, and tonight Jyoti Chaudhry is gonna be talking about assignments, the flips you do. Jyoti, are you there, my friend?
Yes, I am.
It's
And I
all
do,
yours.
thank you. Now, I do see there is a question on assignment clause by Manmeet Singh. Shouldn't there be an assignment clause required in the contract for a property to be assigned to someone else? Now, the answer to this is there has to be an assignment clause that the builder has put in the agreement of purchase and sale in order for a person to either buy on an assignment clause or sell on an assignment clause. Now, normally builders charge fees for giving the consent to an assignment sale. Basically, what an assignment sale is, it's that the assignee, which is the person buying, is buying the contract from the assignor. He's not buying property per se. He's only buying the contract to purchase from the builder. So whenever there is an agreement of purchase and sale from a builder, make sure to have it reviewed by a lawyer and see if there is an assignment clause and if they're going to permit assignment sales. That is very important. And what are the fees for the builder to give his consent? If that clause is not there, that means that the builder will not permit an assignment sale. So basically, an assignment purchase or sale is that the buyer is purchasing the contract to buy from the builder. He's not purchasing the property. The property is still not with the assignor. The property will be transferred when it is registered in the land titles office. So there are various advantages of an assignment sale, both for the seller and the buyer. For the seller, if he has a change of circumstances, say he bought the property or booked the pre-construction property 3 years ago, and then he gets married, he wants to have a bigger place, or he's got kids and he wants to have, he's booked a condo, but he wants a house with a yard, a townhouse maybe, then he can get out of that. He can sell it on an assignment. And these assignment sales are a little different from the normal sales. So make sure that you have an experienced lawyer and an experienced realtor dealing with this. Now, in terms of the purchaser, the advantage that he would have in buying property from in an assignment sale is that he doesn't have to wait 3 years, 5 years, maybe he's going to get it within 6-8 months to a year. And he may even be able to choose his finishes, his colors and everything like that. And he's getting a brand new condominium. So on both sides, there are advantages if they're properly, but you do have to take into consideration if you're selling on an assignment sale and the assignee is not able to close, then the builder is going to come after you as an assignor. You have to close no matter what. So you have to make sure that the property that you have sold to the assignee, he's in a position to close. Otherwise, you have to be prepared to close it yourself. So that is the gist of an assignment sale. And like I mentioned earlier, it's always advisable to deal with a realtor and lawyer who has experience with assignment sales. Any questions that you would like to ask me, I would be more than happy to
Thank you, Jyoti.
You're
One thing I like to again focus on it. Before you even buy a piece of property from a builder, have your lawyer review the agreement first.
exactly.
And you may want to make some changes to it. And all assignment clause will put the liability on you as original buyer. So you want to maybe amend that assignment clause and make sure that you're not liable for it. Assignments are very, very common among investors. We buy and flip houses all the time. Flipping means assigning. This is not only the brand new properties, they're done in very common resale property, fix and flip properties, wholesaling properties. So again, whether you're looking at a flip or an assignment, make sure you contact somebody who you feel comfortable or talk to Jyoti Chaudhry. I have her cell number 416-880-8759. She's located right in the heart of downtown Brampton. And she's a very experienced lawyer. Again, thank you, Jyoti. Anybody have any questions, please put it on the Q&A and she'll be happy to answer it for you. Thank you, Jyoti.
You're very welcome. Thank you.
So next thing we're going to talk about is a rising interest rate, falling sale, putting some investors. This is a situation we are going through right now. Some people who bought the condos in 2019, 2020, they are having their share of what? Some are facing losses. Some are not unable to close. What happens when you don't close a deal? What the builder going to do for you? There are some options. There are a few things you can do. And we are going to bring our expert before I go any further, Randi Goodman. She's an international speaker, 10 times #1 international best-selling author, publisher. And she's also happened to be a very good mortgage broker, real estate broker, by the way. Randi, this is all yours, my friend. I want you to also address what's happening in the market as we speak.
Okay, thank you, Navtaj, and hello, everybody. Navtaj, am I going to be able to share my screen?
I'm not sure, or not at this time, no.
No. Okay.
Next time I will make arrangement ahead of the time.
And I put such a nice little presentation together. Okay. So April sales activity is actually down from last year, approximately 8%. New listings are down about 38%. The average days on market are up to about 3 weeks, which means that it's taking approximately 3 weeks for the average house to sell. And from March to April this year, the sales and average price have gone up and have been going up all year. So that's a good sign that the market is active and being more active. And I have a bunch of stuff to share with you guys. So there's first-time home buyers credit, which is available to people who are first-time home buyers, which means that you could have owned a house in the past, but approximately 5 years you have not. So you could be considered to be a first-time home buyer again. It's calculated on $5,000 times the lowest personal income tax rate, which is 15% right now. So that comes to $750 of a non-refundable tax credit. They are proposing to calculate it on $10,000, which would double your non-refundable tax credit to $1,500. Now you have to have purchased a qualifying home and you didn't live in a home this year or the previous 4 years. And a qualifying home means that it's located in Canada, it's existing or under construction, so it could be a pre-construction. So for example, single family detached, a semi-detached, townhouse, mobile homes, condo units, or apartments like multiplexes, triplexes, duplex, fourplex. There are exemptions. So if you're getting disability or you qualify for that, doesn't necessarily have to be your first home. And there's other qualifications or exemptions as well. Then there's the first home savings account, which is a registered savings plan allowing you to save for your first home tax-free. It began April 1st this year. You must be 18 years old and a resident of Canada and a first-time home buyer. FHSAs are offered by banks, insurance companies, credit unions, and trust companies. Maximum participation period begins when you open it, and it ends on December 31st of the year in which the earliest of the following occurs. So either the 15th anniversary of opening an FHSA, or you turn 71, or the year following your first qualifying withdrawal. There are many conditions to withdraw, one of which is purchasing a property. You do get to contribute $8,000 a year with a lifetime limit of $40,000, and you may carry forward an unused portion to the next year. So if you only put in $5,000 one year, you can put in $11,000 the next year, the 8 plus the 3 you didn't use. And you may have more. More on your FHSA, but you're still limited to the above. Contributions in the first 60 days of the year are not deductible like the RRSPs are on your previous year's income. So they only apply to the year that you're in, and you can transfer back and forth from FHSAs to RRSPs to RRIFs. So it's kind of cool that you have that freedom there. And then there's the first time home buyer incentive, where the government will help you with your down payment, 5 to 10%, depending on the property, which would be added to your down payment on your first home. So, and you only pay it back at a maximum gain of 8% per year on the incentive amount from the date of advance to the time of repayment. To be eligible for this, your annual qualifying income doesn't exceed $150,000. Your total borrowing is no more than 4.5 times your qualifying income. You or your partner are first-time home buyers. You're a Canadian citizen or permanent resident or non-permanent resident qualified to work. You meet the minimum down payment requirements. Incentive is like a second mortgage on the home. That's what they consider it. So let's say your home is priced at $400,000 and you've saved your 5% minimum, so you have $20,000. You can apply to receive $40,000 in a shared equity mortgage. So that's kind of interesting that you have that. And then the vacant home tax, I just wanted to mention, because everybody should have registered if you're in the GTA. Make sure that you have, or you could be fined. The calculation is 1% of the current value assessment of your home. And if your home is vacant more than 6 months of the previous year, you would be charged in the following year. If your property value is $1 million, your tax amount billed would be $10,000. So it's a good chunk of money that you get fined. You need to have your 21-digit assessment roll number off your property tax bill in order to register. But whether you are living in it or not, they want you to verify whether you are or not. If you're living in your home, obviously, you're not going to get fined, but if you are renting it out or using it as a part-time home, then it's possible if it's vacant for too long. So there are some exemptions, but you do still have to register the property. And I have 3 assignments that I want to share with you guys. So one of them is a 2-bedroom, 2-bathroom condo in North York at the Keeley Condos. It's a stunning and unique 2-bedroom, 2-bathroom overlooking the water at Downsview Park. It's almost 900 square feet with $25,000 in upgrades. It's got 1 parking and 1 locker with ensuite laundry, and occupancy is July or August this year. And they're asking $898,000. Great property. And then there's a townhouse in the Keeleys as well, which is a 2+1 bedroom, 3 bathroom, large corner, 2-story, has cap maintenance fees, and it's over 1,400 square feet with private entrance and terrace, 1 parking, 1 locker, includes access to all the amenities of the condo building, and it closes this September. They're asking 1.28. And then one more, there's an Etobicoke assignment at the Taylor, 2-bedroom, 2-bathroom, 649 square feet with a huge balcony of 173 square feet. And it's at Queensway and Kipling, and it closes at the end of August, and the asking price is $798. And if anyone is interested, I will put my info in the Q&A section. Thank you.
All right, thank you, Randy. Appreciate it, my friend. This is Randy Goodman, by the way, and we will be speaking to her. Pretty soon, we're gonna be doing definitely one day live presentation with a brunch with all of us together. And I believe that the date is coming fairly soon, by the way, so just get ready for it. Next thing I'll talk about what's happening with the real estate market quickly, and just walk you through what we should be aware of it, what we should need to be knowing about it. If you want to buy a first-time house in Canada, different cities, what kind of down payments you need. This is something from Zakasa. It's quite helpful to see why people want to buy a single family home as a solo person. What kind of requirements do they have? And there's something which gonna shock you is the closing cost. And this is something a lot of people are not aware of it. This is something affordable condo in Toronto or everywhere else. This is how much you need. This is something where you pay land transfer taxes. If you're a first-time home buyer, you're buying a first piece of Toronto, you're looking about $30,000. If you're a second-time buyer, and if you're a repeat buyer, you're looking at about $38,000. By the way, you look at this number and you compare yourself to Alberta market. What will be the land transfer tax in Alberta? Maybe $300. That's why a lot of Canadians, especially from Ontario or BC, look into Alberta, where there's a lot less land transfer taxes. There's no PST, especially in Alberta. And Alberta intend to attract a lot more investors now for a positive. But again, Alberta is not Ontario or BC. They're different here. But again, just be aware of it when you are buying a piece of property in Canada, especially in Toronto. Be aware what exactly are the closing costs. You're buying a house for 1.2 million, 30,000 on land transfer taxes. That's only for first-time home buyer. If you're a repeat buyer, that's about $38,000. It's about $8,000 more. Just thought I just should share information with you. People get a shock and we get a call at the last minute. Navtaj, can you lend me an extra $40,000? What can I do to arrange $40,000? What the bank giving me? No, banks don't give out the land transfer taxes. You got to come up with the money from your own pocket, by the way. This is something else we are talking about, business insolvency. This is a pretty scary part of it. Insolvencies are still going up, especially in small businesses. It's a tough time for a lot of businesses, even though we are growing. There are some factors which affect us no matter what we do. This is something else. That average house price of tank about $100,000 in GTA, which is a bit hard to absorb. But again, if you look at the prices, how they went up, some people just get caught on the tail end of February 2022. And those people who bought the property at the peak of it are definitely in a deeper water. This is the story I like to share with. This thing excites me. These two gentlemen. I know of them, and they built a multi-billion-dollar empire together. Two brothers, $13 billion. And one of the best thing about the whole scenario, they are just doing something incredible. They're building about 800 acres in Hamilton area. They are building, to the best of my opinion, they are being the largest industrial park in the province, about 12 million square feet of space. That's humongous. And these two brothers are just absolutely inspirable. They are become like a new legends in their own way. Brady and Blair are the names, by the way, and what they have learned, what they've implemented, it's heads up. I mean, it's just incredible. I read about them before, never got a chance to meet them in person lately, but I'd love to meet them again and see what we can do. Again, the best advice they have from a preserve, always keep trying and put your heart into everything what you do and ignore the noise. This is advice from them. And their advice, the only things you can control are your efforts and attitude. Work hard, be nice and fun. These are the advice from these two multi-billion dollar real estate empire they put together as two brothers. This is absolutely incredible. So this is not nice. So this is you might have heard on this news. Media gets really up on it, mortgage fraud. This is a little bit more complicated, but the reason I want to bring it to you, the Minu Towers, Now Towers, On the Mark Towers, as well as some properties in Barrie, as well as Bay Towers, High Crown Estate. These properties are limo, and they have $200 million loans. Those who have invested in these deals, and we're gonna let you kind of keep you informed what happened. There is a little bit more drama to it about this whole developer. According to them, one of the chief operating office, one of the accountant or one of the person was writing the checks and cashing it out, and somehow it appeared to be fraud. Not sure exactly, but there are several different stories to it. But again, just thought you should be aware in case you have put a deposit in these deals. There are about a couple hundred houses, by the way, altogether. And again, they are Stateview homes, are Stateview homes. So this is something we will see. We'll keep you informed. Let me leave it like this for the time being, though. Just thought I'd share with you. This is in Browntown or Brampton. This is where we have big issues from time to time. How many people are complaining about illegal rooming houses? How do they handle it? This is something we should be aware. When you have an illegal basement apartment or you're renting your house as rooming house or student housing, it is not legal. And people or neighbors may gonna complain about there are too many cars, too many traffic, they can't park or the zoning doesn't permit it. So, but be aware of it. Please do not buy a piece of property without doing your proper due diligence. If the basement is not legal, it's not legal. Deal with it. That's the fact. If it has been, somebody has been using it illegally, it does not make it right. If they never get caught, it does not make it right either. So just be aware of it. This type of complaint to the city intend to go up and down time to time, because sometimes you notice people who can afford the home, they have to start getting some extra income. They're renting out to people. Sometimes those renters may not be the decent renters and create a chaos in the neighborhood, though. This is a good news and bad news. The bad news is that a lot of Toronto towers sitting empty. So those companies which own real estate investment trusts are kind of getting concerned, because in Toronto is about 20%. The highest we have is 23% in Edmonton. But here's the opportunity for you. As I said, where there is a problem, there's opportunity. Where's the opportunity here? So the city or the federal or municipal or provincial government, we're gonna pop up and gonna say, okay, listen, why don't we convert office towers into residentials? And they might be giving you about $75 per foot. And there could be grant, could be interest-free, depending exactly what you want to do with the building. Are you going to create a non-profit, non-for-profit, for-profit, rental, or condos? Again, if you look at the cost to build and the cost to buy these towers is much, much cheaper. To replace these towers will be a lot more, it costs you more money. To buy them and convert them might be much better and cheaper. This scenario going to continue for next 10 years to come or next 15 years to come as we progress. As the artificial intelligence take over, we're going to find that a lot more people are going to be start working from their home or from remote locations from anywhere in the world. They don't have to be living in Canada or in the same city. This is opportunity in one way. Those who want to do it in a small buildings to big buildings, we might have some deals for you. Those who are interested in building something up to 90,000 square feet or so in Ontario, you can talk to one of the superstars here tonight, and they will be happy to do so. Just put your question if you are interested. You're a developer or a builder. I know a bunch of you are on today. I see a couple of developers and builders here today. I won't name them for the purpose of their privacy, but you can put a question here in Q&A. This is a scenario where we went through the same problem in the BC, especially. If you sell a piece of property below the assessment value, the provincial government want to know, hey, what's going on here? Why are you selling the property below the assessment value? Are you trying to do something funny? Are you trying to avoid paying some taxes? So this is not the case. The BC Supreme Court have decided, no, that's not the case. There could be situations where people have to sell property for less or more. And this was a number company which bought the Swiss bakery on 3rd Avenue, by the way. They were dealing with it, and the courts have decided in the favor of the people who bought it for a lot less than assessment value. So those who are buying super discounted properties, be aware that you are going to get a letter from the provincial government asking you, hey, how come you bought this property far below the assessment value? So you can simply answer it, hey, rundown property, or I bought a discounted distressed sale, and you must apply it. Otherwise, you could be facing another threat, another letter from them as well. Where the property prices have gone up, this is the area. Some of you will be shocked actually that some of the areas where the properties are gone up are those areas where most people think, I don't think so, I'm going to live in that area. And Birchcliff, yes, Oak Ridge and Birchcliff, yes, the property have went from 320. If you look at very, very carefully, except one area, which is the Bridle Path or Hogs Follow or York Mills or St. Andrews area, this property have gone up by 74% in the last 5 years. But the rest of the areas are where the properties were dirt cheap. They are considered the poor areas, and those areas have done well. The reason I want to show to you is something you might have to utilize as an investment strategy. You don't have to go to the expensive area or mid-class, and some areas which are undervalued have a much higher appreciation or demand, and they justify the cost to invest in the area. If you're buying a condo for $320,000 or $500,000, and which give you positive cash flows, better than buying something in downtown for 1.2, which give you negative cash flow. Again, you have to look at the area, look at the future potential as well. Just a different strategy. If you may want to consider for next time, you want to consider buying a bunch of condos or so. These are the neighborhoods where the property value have gone up. Again, if you look at it very, very carefully, it's not one of those most expensive areas, except in Stonegate, which is Queensway area. That area is gone up substantially, about 52% in the last 5 years. But if you look at other neighborhoods, these are the medium or low-end areas. Melbourne Rouge, West Hill, Scarborough Village, Guildwood. Morningside. If you look at out of 5, 4 neighborhoods are in Scarborough area or Scarborough. Scarborough will boom, period. People will move to Scarborough because of affordability. And that's something, it's something you can look at it and say, okay, maybe I should look into that area as well too, if you're investing in that area. Again, Toronto remains the king of the cranes, no matter which way you look at it. There's more development going in Toronto than anywhere else. This is something good news. As I mentioned earlier, the BC, they're going to allow from a single family home to 4 homes on a traditional single family lot. This is going to have a ripple effect eventually. It will pop up eventually in Toronto area, where you can build a secondary suite, basement unit, or even a duplex, townhouse, or triplexes. In my opinion, just a matter of time. As long as you own the property or few properties in this area, in Ontario or GTA, I do believe that the conversion is going to multiply your profit. It will not be appreciation percentage-wise. It will multiply the value itself. Again, that's why how the builders build it. Builders look at it from the multiplying factor of it. Even though mortgages are slightly higher, I strongly believe this is a good cue for us for investing for the long term, even for a short term basis though. The income you need to buy in Canada, this is something which could be mind-boggling, but there are lenders. We'll be introducing you lenders pretty soon in the month of July. I'll bring them in person. We're going to have a brunch, and they are going to discuss some of the more options, which is not traditional at all, but they're the banks. And these banks will look at everything in such a manner, wherever you can prove it to them that's your income, and they will grant you a mortgage. And that's the best part of it. You don't have to do any misrepresentation. You can tell them 100% truth. Just tell them everything the way it is, and you will be able to get a traditional mortgage from the bank, by the way. So this is approximately income you need to buy a single family. And it's 280,000 to 200,000 in Toronto, by the way. These are approximately house prices in February 2023. And you look at it, and the cheapest you can buy is St. John's or Halifax, which is in the Maritimes, by the way. Even that area has boomed up quite a bit. People used to consider Manitoba as the cheapest place to live, or Saskatchewan the cheapest place to live. But again, those prices have jumped up quite a bit. A lot of people are moving to Alberta, especially in Calgary, by the way. And Calgary, because of that affordability factor in Ontario and BC, Alberta is enjoying a mini boom. A lot more people are investing in it. All the traditional investors who are into speculation are buying more and more into Calgary, Edmonton area, or Alberta itself, and they feel the rents justify the cash flow. Income you need to buy a condo, again, from Vancouver, you need 112,000. Toronto's 108,000. That's a typical, you're looking at average house price though. This is something, this is a question, I always answer the question. Should I invest in real estate? Absolutely. What is the compound annual growth for the last 30 years? 7.5%. Please show me any investment which can give you that kind of leverage and that kind of a return, even though because of all the booms and bursts. So that's why I focus on, I suggest you, hey, please take a picture of this slide if you like. This will make sense to invest in real estate. And the best, again, this thing goes, oh, I wish I bought 10 years ago, 5 years ago, 2 years ago. If you're not buying it, you'll be the same regret. Oh, I should have bought in 2023. Should have bought in 22. It doesn't matter, the market adjusts itself. If you're in for the long-term basis, please keep in mind compound annual growth it's not, the money is not only growing on your down payment, it's growing on top on the value of your house. So you're leveraging it sometimes 80, like you bring 20% down or even less, and you are refinancing it and you might be pulling all the equity out. But the compound effect stays on and on forever. Especially in GTA, the way we look at it, the way we have situations right now, the amount of the population, the growth we have, I do believe this number is going to be a little higher as we go along. Just thought I should share with you. This is the interest rate, by the way. Those who are saying this interest is too high, look at the interest rate where we were before, and average interest rate from last 30 years is 5.78. Enjoy this rate. This is not the highest rate, by the way. So you look at the figures, it'll make you feel good. This is much, much better rate compared to if you look at the average from 1990 to 2023. So they, again, let's utilize this as a whatever we have is good. And let's keep moving forward, by the way. Subprime mortgage problem is growing. Yes, it is true. But again, there is a certain area, certain type of people who have over-leveraged themselves, spread them too thin, too far. They are going to be paying for it, unfortunately, but it happens in every business. This is not something we need to. Are we in the buyer's market? Depending on who you speak to. Realtor will not agree with it. This is a buyer's market. They're going to still say it's a seller's market because they are seeing what they are visualizing themselves, because they're experiencing, hey, I put a piece of property or listing, I got 4 offers. For them, it's a seller's market. It's seller's market. On the other hand, people who are unable to sell the home, they are saying it's a buyer's market. I'm not getting what I was expecting to get in 2022 in February. The prices have dropped. So again, it's a matter of opinion, but if you put a hardcore fact, and depending exactly what are you investing in it, and be aware of it. As long as the property is having a positive cash flow, it's always a good investment. But keep in mind that keep every single expense into consideration. And there is also a cost. There's also going to be repairs. No matter how good the property is, there's going to be unforeseeable expenses. So be aware of it. This is a typical example. I have mentioned to you before, combined salaries, 140,000 monthly take home, this one. And this is when interest rates have gone up from $2,800 a month to $4,400 a month. There are a lot of families like they're hurting. They're holding on to it. Not sure how long can they hold. I hope the interest rates do drop dramatically to 2.5% or 3%, or maybe less, so that they can continue. But again, we will see. This is all depending on the bond market. There are several factors how the interest rates are calculated. That's a variable, short-term or long-term. David is the right person to discuss. These are the issues a lot of families are facing. GTA rent, that is a alarming situation. A lot of frauds going on right now. So anytime you see open a TV, newspaper, whether it's Financial Post or Global Mail, or any national newspaper, you will see a scam happening. Be aware of it. If you're renting it out, especially check the tenants out as well. There's a classic situation going on in Toronto where tenants have been able to not pay the rent for more than $50,000. So that does not go through typical landlord tenancy board, LTB. Now they have to, the owner have to go through the Superior Court of Justice, and that's a totally different ballgame. They have to sue them. And the gentleman who's renting it have not paid the rent for a while. Altogether, they owe more than $50,000. So this type of tenant can make you bankrupt. So be aware of it, don't rush into it, follow the law, follow the instructions. If you are taking some education, please follow it. You do not become a landlord because you own a piece of property. There are rules and regulations. You got to know some basics. So It's okay to take a training. It's okay to get educated. It's okay to attend networking meetings. They are very important for you. Those who have RSP money and TFSA, we are always open for your investment. If you're looking for 7-8% return, safe and sound, we have projects for you. Just text us if you want to know more about it, how to invest your TFSA. If you're getting 12, 13%, 15%, 20%, be aware of it. The higher the risk, you could lose it all or just want to play safe. Your call, your choice, but be aware. Make sure you get advice from your lawyer and accountant before you invest, period. This thing is happening no matter where you go. There are forced home sales are happening that people are in trouble. They're going to lose the home through a seizure, or foreclosure, or power sale, or something else. So forced home sales are happening all across Canada, and these people have bought the properties, they have leveraged, they are unable, they do not understand how to leverage it properly, or they cannot hold on to the cash flow. So some of them, either they're going to lose it all or lose a bit. Either way, when they talk to investors like you, we have multiple solutions for them, and we're able to walk them through that. It's much, much better that way, though. So this is typical example for those people who used to pay $3,000 or more mortgage payment is $5,000. How long can they survive? Not very long. So these for home sales, sometimes we are able to figure it out through a joint ventures, fractional ownership, or tell them to time to downsize, move on to much reasonable place where the rent or payments are up to their budget. These people have to lose some money, but it's very unfortunate. But it happens when market goes up, they benefit, but market goes down, you end up on the short end of the stick, though. This is, again, those people who have short variable mortgages and they have line of credit on the homes. They're also facing the same dilemma. They got themselves in a pickle here. They don't know what to do. How can they take care of the current situation? But again, there are $2.2 trillion is available. This is the private money available for you. If you want to know how to tap into it, we'll be doing a special presentation for 2 days, how to raise private funds for your investments, by the way. This is something have to be done by building a relationship. There's no magic formula. There's no pools out there. You got to be very careful with the Security Commission. How do you ask people to invest money with you? All these things, you have to stay within the law, and you must have a good lawyer. If you have a good mortgage broker, perfect, and you happen to be a member of any real estate club, that also helps because people know you, and hey, they invest money. They don't mind investing money with you. Next thing we're going to talk about is investors are everywhere, and majority of the Canadian homeowners, I would say a quarter of them are becoming investors. They already have principal residence, and now they own 2 or 3 more properties, or 2 properties, 1 property. The numbers are much higher in BC compared to Toronto. But also, as a matter of fact, it's just shocking to know that people are investing more heavily in Manitoba than Ontario. Just information came from Stat Canada, and people think, oh, people in Manitoba don't invest. No, they do. These are the numbers, facts in front of you, by the way. Because in Manitoba, yes, don't ignore it. We have done a few deals there, and they're pretty lucrative, by the way. And the investors out there are much friendly. It's few small towns, whether it's Churchill or whether it is Thompson, whether it is Brandon or Winnipeg or any other town. People live there, by the way, and things happen there as well, just to let you know. This is a heating incentive program from the heat pump. Those who want to change from oil heating to a heating incentive, which is called a program called heat pump. This is a $4,500 grant available for you. Next thing, those who have not bought the books, by the way, these books are updated now. Those who are not utilizing these grants, might be paying for all the premiums, but not getting benefits. Those want to buy the books, we have a new print become available. We just got the books last week. We are the junkies. We like to buy properties, by the way, and anybody you know want to sell the property at a deeply discounted price, we are the right buyers for you. Something you should know. A couple of things I think I should mention to you. The coaching program is still open, wide open right now as we speak. For those people who want to strictly do not want the haha, the gaga, seeing a YouTube, want to do the deals, this might be for you. Apprenticeship is ongoing, by the way. We've changed everything. The way we used to do apprenticeship is done totally differently. You can enroll anytime and you are able to re-attend or watch this thing again and go through the whole process differently. Foreclosures and power sale, the defaults are much, much higher, by the way. This is something about defaults, talking about delinquency. Delinquency does not mean that you don't lose the house if you are delaying or missing the payment of a credit card. People can lose if you are not paying your creditor. Even though you are making payments on your mortgage, that does not guarantee you will not lose home. One more time, if you are defaulting any kind of a loan, credit card, or anybody you owe money, you could lose everything what you got, all assets you have. And that thing is called civil enforcement, a different ball game. People don't realize that they could lose their home even though they have never, ever missed a mortgage payment. Very painful. Not that many investors know that, especially those investors who have taken the training, understand it, understand the process of it, and we find opportunities. And we also offer help for those who are defaulting. The credit card defaults are rising, so are the auto loans are defaulting, line of credits are defaulting. Mortgages are, people think, oh, if I make the mortgage payment, I'm not going to lose my home. Not true. You default, any creditor, you can lose it all. Welcome to Capital Society in Canada. Everything's for $1. You pay installments. That's how it works. And that's our society. These are the latest figures, by the way. David was talking about our defaults are not that many. Unfortunately, these defaults are not up to date. Number one. Number two, they're only reported by 8 lenders only, all the charter banks. And these figures are outdated most of the time. This is the report from January 31st, but it gives you a bit of a clue. There is a positive aspect of it. You know exactly where the most of the defaults are. Right now, Alberta is on the top. Then the second comes Saskatchewan. Third come the Atlantic provinces. About 5 million mortgages here altogether, about 8,000 are defaulting. But these figures are not correct, by the way, but they give you a bit of a guideline. This report comes from the Canadian Bankers Association. So power sales are flooding, even in Toronto, a lot of defaults coming in. We get quite a number of leads coming in. Some leads are a lot more helpful than others. This is other issue. David, are you still there?
Yes, I'm here. Hi, I'm here. Yes.
Okay. Can you address this one for me, please?
Okay, well, let's have a read here.
Talking about private renewals when people are
Okay,
defaulting.
private renewals. Yeah, so private renewals is an interesting area because it really depends on the lender. And if the lender doesn't want to renew and you are and you need to go out to find money, and the price, you know, if you're leveraged at a pretty high loan to value and now you have to get a new appraisal, you could be in very serious trouble. So I had a case like this with a private, with a client and a private loan, where about a year ago, we gave them a second mortgage to about 85% loan to value. And at renewal, we were very lucky that the lender was agreeing to renew without any questions asked. They charge a small renewal fee, because if they said that they wanted their money back, this person would have been, up a creek without a paddle, because they were now at leverage to between 95 and 100% loan to value, and it would have just not been possible to get the money. So fortunately, the lender was willing to renew. So that underscores the importance of making your mortgage payments on time. Otherwise, the lender's going to be less cooperative.
So the message is, the takeaway is, in case you are private, if you're dealing with a private lender, make sure your payments are in time, you have a good relationship, with the mortgage broker, and be upfront with them. You might be able to weather the storm. Otherwise, you could be totally taken away altogether. You can lose it all. Is that correct, David?
Yeah.
All right,
That's
thank you,
correct.
David.
I mean, private money is usually meant to be a short-term bridge, but if you do need it for more than a year, it's good to have a backup plan, because there's no guarantees when you're dealing with private lenders. It's possible that the lender will say, they want their money back. So have an exit strategy, have a backup plan. The mix mortgage investment corporations are more likely to renew than, let's say, some private lenders. But you need to have an exit strategy when you borrow money in a private scenario, because you could be in trouble if the lender chooses not to renew.
All right, thank you, David. Appreciate that.
Sure.
Moving forward, this is insolvency. This is, we're talking about bankruptcy. They're up. And when somebody go through bankruptcy, especially, it becomes totally different when you're talking about commercial properties, multi-units, developments, and so on. That becomes very interesting scenario altogether. I will be attending, and I've been addressing some of the issues about insolvencies in coming weeks here, and I'll be keep you informed of what exactly is happening though. This thing is again, this is the come from the bank, from CEO of one of the big banks, saying, hey, tens of thousands of Canadians could default on mortgage due in rising rates. That was January 10, 2023. Even though it's pretty old news, just be aware this type of headlines does not send a very positive message to the market. It scared a lot of people off though. Even people who are thinking about it, buying a property or investing in property, when you see this type of thing, you should look into, hey, this opportunity time. Every bad news is a good news for investors, by the way. Once again, every bad news, every bad headline in the newspaper can be good news for investors. That's what I like to share with you for a reason. This is something for sales listing. This is where banks or private lenders asking, hey, listen, if you can't afford the property, put it in the market for sale. And that has been still going on, by the way. As David said earlier, there are two types of private lenders. One are individuals, other are called mortgage investment corporations. And both of them are looking into it. Hey, listen, if you can exit now without we occurring any loss, it'd be better for you. Because the grass is not going to get much greener if you're having trouble now and you have trouble with other payments right now. Maybe it's time for you to call it quit. The for sale listings are sometimes done as a solution from the direction from the mortgage broker or the mortgage lender. Say, listen, you know what? This is not for you. Just move on, maybe come back when you have a bit more money or when things settle down for you. This is another town I've been asking you again and again. There are some areas in Toronto, in certain pockets of Toronto, where people have mortgages much, much higher than compared to other areas. So there is a one part of the town called Milton, where 80% of the homeowners have a mortgage. If the more people have mortgage, the chances of default is much higher. So that becomes the ground zero for defaults as well. So just be aware that you may gonna find that there will be some properties coming out of Milton area under power sale, foreclosure, or something else as a distress sale. There may or may not be enough equity there, or there could be enough equity there. But just to let you know, this is something, every time you look at the news, you look at it as an opportunity. It can be a great opportunity for you. This is risk and prime mortgage have sold to 72%. That's pretty, this was a big news. There was all kind of discussions on televisions, to the radio stations, to the newspapers, among the different brokers, realtors, you name it. But this is something where they're saying the private mortgages are getting more and more in demand because people cannot qualify. So mortgage brokers become extremely busy because people say, oh, I cannot qualify through traditional bank. And that's why there's a huge demand for private funds though. Let's skip this one. I'm gonna skip this one. The masterclass is coming up. Those who have never taken any training, this is the masterclass or real estate seminar on May 20th. It'll be Saturday from 10 a.m. to 12:30. It's a summertime, and based upon the request from most of you, we decided we're going to do it some Saturday as well. Though our field trip is coming on this Thursday. Some of you may be able to recognize some of the pictures here. This will be from 8:30 to, it will be from 8:30 to about 3:30 altogether. Those who are interested in it, you can send a text message to us if you're interested in joining it. There's a cost to it. It's exclusively for apprentices only though. Some of these things are eye-opening when you go and see an auction with your bare naked eyes, and you'll be shocked that each auction creates a lot of losers and very few people who know how to buy it correctly. And people lose their everything because they do not know how to do some basics. They know nothing about auction. They know nothing about due diligence. They do not know what exactly are they buying. Be aware of it. Auctions can be great if you have all the tools, strategies, and education and people behind you. If you're just going with a blinder on, you could become a next victim. Just thought I should be aware. Be aware of super priority lien. This is the lien which does not go away. There are two types of liens. This lien comes from the CRA. It takes the priority. People don't like it. This is, people do not know what exactly lien is, what is a super priority lien is all about. And the other lien we will show you in person. And that lien is known as nosy. And we will be definitely discussing that. Maybe not in as detail as we like to, but we'll definitely share with you. This is the most dangerous one, by the way. When you're buying a piece of property or selling a piece of property, what nosy is all about. We want to take all the questions. We're going to answer all the questions for you right now as we speak. So those people who on the panel, maybe you'd like to reply this thing. First question came from our good friend Blair Mills, but the Bradford bypass to build as well as the proposed 413 loopole around Brampton. That's something is Doug Ford like to do it. I think it's a great area, but again, it's touching the green belt. So this is something we will see as we go along, but definitely Doug Ford is doing every possible thing to build as much as he can. This could be a solution for the Toronto traffic, especially 401 and as well 407, and could be great for logistic companies, especially trucks, which have to go through Toronto, whether they're going to Windsor or whether they're going to Ottawa, Montreal. That will be definitely a good one. Blair, do you have any input you'd like to add on it? will just, Blair, you can talk, my friend. Blair, are you there?
You want me to join the call?
Yes. The question you asked me about Bradford.
Well, I was wondering if it's a go, because then obviously there's opportunity of the old saying of how's it go, something about build it and they will come. Just look what happened to 407. It was all green land, farmland. Look at all the industry and housing, everything that springs up around a highway. So as soon as that happens, there's the domino effect.
Well, whether 413 is built or they build something along the line, there's definitely gonna be some sort of a development in that area, period. The question you asked about the Bradford bypass, definitely in the works, just a matter of time.
Okay.
And definitely because there is something, the congestion we have in 401 and Don Valley parking lot to all these other byways and highways. I will not dare to go on 401 now, even the weekend, by the way. They are shut down. This is a chaos from me to go to airport takes an hour and a half. I'd rather take 401, 407, but it is a nightmare. But Bradford definitely, Basco is going to be definitely reality, just a matter of time though. You're also working on the hotels, is that correct there?
Yes, so we're working on one in the works. Hopefully we'll get the revised plans in here for the 9-story option.
Okay. And 9 to 11, 9 to 12.
No, it's going from 7 to 9.
Okay. Not
But
12 yet?
hopefully they got approval for it. That's the thing. It was approved for 7, so I haven't heard the outcome of the 9 option.
You mind if I ask you the location of it?
It's 400 north of 7.
Okay. I think he already own this person we know is already on.
There's a group of hotels up in that one area.
Right in front of the one mall. I know the shopping mall there, right? Not the one mall, but in the shopping.
Yeah, no,
Highway
yeah.
7 400, right? Where the Walmart is across the street. There are a few hotels.
North of it, yeah. Where the existing hotels are in that area.
But me ask you a question, Jyoti, if you're there, should be there an assignment clause required in the contract for property to be assigned to someone else? Jyoti, are you there?
Yes, I'm there. Yes, definitely. I think I did answer this before. There has to be an assignment clause in the contract, the agreement of purchase and sale of the builder, for you to be able to sell the property by assignment. If the assignment clause is not there, you will have to talk to the builder and get him to insert the clause. And if he's not willing to do that, that means you cannot sell by assignment. So that is a must. If you are thinking of an assignment sale, that clause has to be there.
Is that answer your question, Manmeet? Anybody else have any questions? There's another new question came in, Rafiq. Okay, thanks. Okay, no, that's done. Anybody else have any questions? We got another 5 minutes here. Your question have to be in writing, by the way. And our experts are still here to answer everything what you need to ask. Anybody any questions?
It looks like nobody has them right now.
No, all the questions have been answered so far. Oh, here's the question. Oh, thank you. Okay, sir. Thank you to all of you. Thank you so much for being here tonight. Sincerely appreciate your presence. We are thinking to have something in month of July or August for the networking meeting. We're gonna do it very nicely. We did last time in April 23rd. Due to circumstances, we were only able to accommodate 20 people. It was very nice to meet people in person. That was something really nice after 3 years to see people in person. Rafiq, can you please talk about municipal tax sale and its pitfall? Not tonight. We'll be more than happy to answer for you another time. That's a huge different topic altogether. Be aware of it that it is a lot more complicated. If you are not properly educated, not experienced, don't have proper coach, mentor, and all the strategies, tools, and money, you could be in trouble. Can you reassign? They already said, okay. Can you assign contract again? This is another question for Jyoti. The question is asked by Donna
Okay.
Smith. She's asking a question. The question is, if we bought an assignment, can we assign it again?
What you're assigning is the contract between the builder and the assignor. So it is a contract between three parties, the builder, the assignor, and the assignee. I'm not sure if you can assign it without the transfer of ownership. So I think it is doubtful that you can assign it, because otherwise it will get too complicated, and who's the actual party buying it would be an issue that would create a lot of confusion. So I do not think that you can reassign a property that has already been assigned unless the transaction has been completed.
Okay. Well, Donna, let me give you a different answer to that. We call flipping the flip. As from a builder point of view, I will not say much about it. But when it comes to resale, this is quite common. Just to let you know that some of the properties you might know, what we did the flipping the flip 3 times before it closes. It was in the Huntsville area, because you are aware of that area. So the deal was flipped from me to Mike. Mike flipped it to his brother-in-law. Brother-in-law flipped to other person. So before the real deal closes, it was flipped 4 times. So again, that was a resale. But when it comes to builder or so, you might have to seek the advice from a lawyer to make sure what are the implementations are. Whatever the lawyers say, as long as both the lawyers from both parties are on the same page and they have a good understanding. Sometimes, in my opinion, the assignment, you need definitely a very experienced lawyer to work with.
My answer was with respect to builder's assignment sale. My answer dealt with builder's property, not resale property.
Thank you, appreciate it. Thank you for clarity. Does that answer your question, Donna? Thank you so much. We have done that question. I'm going to take one more question. If there's any one final question before we call it for the day. I sincerely want to thank everybody for tonight. I sincerely want to thank our panel for David Grossman, Randy Goodman, Gary Huggenhout, and of course, our friend Jyoti Chaudhry.
Thank you, everybody. Thank you, Navtaj.
No more questions. Okay, all right. Okay, thank you. Good night.
Good night,
All right.
everybody.
Good night, everybody. Thank you once again, and we'll look forward to see you in the next meeting. Take care and good night.
Good night.
We got one
Thank
question.
you.
Donna, you can give me a call. I'll be more than happy to answer it for you. Thanks, Donna. Good night, everybody.